we think this is a completely imbalanced market, right? And it is an inefficient market. There's an information asymmetry favoring the GP, which is creating distrust among LPs. The more trust that enters this market through these reviews, the more liquidity will move and move faster. It'll
Mm.
become an efficient market if the information is balanced on both sides, and the industry will grow.
Welcome back to the AI Edge podcast, where we talk with operators, founders, and capital partners who are changing how real estate actually works in the real world, not just on spreadsheets. Today's guest is building something that sits right at the center of trust, transparency, and LP protection in private real estate. He's the CEO of Invest Clearly, a platform that connects limited partners with verified reviews, real experience, and sponsored track records so people can see what is exactly happening when you invest with a GP, not just what's in the deck. Before that, he led a high-performance sales team at Gartner, co-founded a full-service sales consultancy, and has built a career around understanding how trust, communication, and value really work in the marketplace. Pat Zingarella, welcome to the show.
Thank you. That was a fantastic intro.
It's awesome to have you here. I'm really excited about getting us started.
Yeah, I'm excited to join. Thanks for inviting me on. This is great.
Fantastic. So let's start simple. When somebody asks you, what do you do? How do you usually answer that?
Yeah, good question. It depends who's asking. The things I tell my mom is completely different than the times I tell like a limited partner.
That's
But
awesome.
no, really what I do is basic tagline is we're bringing transparency into private markets. And what does that mean? If I had to narrow it down to something very, very simple, we're the Yelp for private real estate right now. And so to expand on that a little bit, what we've built is a review platform where LPs, limited partners or investors that provide proof that they have invested with a GP or general partners or operators of real estate private equity companies have the ability to write reviews on them. It's also a directory. So those limited partners can go in, input their investment preferences in the form of filters, and see a short list of GPs that match those investment preferences and what they're raising for currently. And so the real value to them is it's a centralized location to help them find and evaluate private investing opportunities.
Incredible. So how did Invest Clearly come into existence? Was there a moment or a story or something that you saw in the syndication space that made you say, this has to exist?
Yeah. So it actually started before I even knew what syndication was. It sort of became like all roads lead to creating Invest Clearly. And I tell people it's really a 3-part story, right? The first part, I worked at a company called Gartner, and what Gartner is, it's a research and advisory firm in the IT space. And so what we would do is we would sit in between buyers and sellers of technology, and it would be an objective source of information where we would advise sellers of technology on how to build better products. We would advise buyers of technologies on how to evaluate sellers of technology. And the subsidiary of that company was a software review site. And so big purchasers of software would go and research that software products based on their needs, and they would read reviews from other CIOs, right? And so I was there, and at the center of everything was objectivity, right? You couldn't compromise any sort of neutrality in that conversation. About 5 years at Gartner, where I was in the small and mid-sized tech division, working with CEOs on their go-to-market strategy, thing like that. And while I was there, I started listening to podcasts on real estate. So, got into my first active investment, some small multifamily stuff, but through masterminds and communities, I met a commercial real estate investor. And the guy was kind of becoming big time in the media space. Everyone wanted to be around him, was becoming a big influencer. And I eventually went out to work for him. And when I went out to work for him, and through my relationship with him, found out the guy was committing a ton of fraud. Right. He was pretty much not what he was putting onto. And he actually ended up taking advantage of about 60 investors. And so I left that pretty quick, but I kind of had this thought where I was able to tell my inner circle about my experience. But if something like Invest Clearly existed, I would have been able to prevent a lot more people from experiencing something like that. And so when I was leaving that individual, I ended up doing some sales consulting. And one of my clients actually sold accredited investor lead gen. What they would do is they would sell digital marketing services and build funnels for GPs. And so I would start talking to GPs, and I would talk to about 5 different people in the same asset class in a week. And I had absolutely no idea how to differentiate between any of them. I just didn't understand it. I felt pretty smart and I couldn't figure it out. At the same time, I started thinking about becoming an LP myself. And I was like, all right, well, let me go see where to find these people and all of their deals. Nothing existed, right? There wasn't like a directory out there. Then I was like, all right, well, let me read reviews or let me learn about people's experiences. That didn't exist, right? It was fragmented across forums. It was random accounts posting whoever they wanted to, and there was no centralized location for this. And then I was like, all right, well, let me figure out, I'm going to book a call with these guys. Let me figure out what to ask them. And every thing I found on how to evaluate a GP was written by a GP. So I was like, this is not really objective. And like, I don't really, and so all of those things at once led to Invest Clearly, right? It was working at Gartner and having that experience. It was the experience with the commercial real estate investor, and then it was the accredited, and then it was the lead gen client. Like all of those were like, okay, well, let's build this thing I'm looking for.
Incredible.
Thanks.
How do you,
In terms of on the site, yeah, so I'll tell you how we started finding them and then essentially what we've grown into now. So when we first started this, what's really interesting about the site is the growth of it has been unique because it's a marketplace. It's effectively a directory in a marketplace. And so no one wanted to be on it until everyone was on it, so it's a chicken and the egg growth strategy. And so what we would do to get started is we broke down SEC filings. So we would essentially go in and see which companies was filing a Form D under 506C, filter it down to real estate as best we could, and then add them to the site. Because the foundation of the site is it's every GP that's ever existed will eventually be on the site, regardless of their participation, right? Regardless if they want to be included, regardless of what, it doesn't matter. We source all of the information from publicly available info. LPs that provide proof that they've worked with those GPs can write them whether they like it or not. And so we started by breaking down the SEC filings, and then we would obviously prospect, hey, if we saw ads, we would add them. If we saw something on social media, we would add them. Now we're at the point where we're rolling enough where people are submitting to have GPs on the site. So essentially, like if an LP says, hey, I've invested with this person, I want to write a review on them, they're not listed, we add them. Or if a GP says, hey, my company is on here, we add them. Or isn't on here, we add them. That's those are the main. In terms of the LPs, how we find them, they find us. 50% of our traffic is organic, which is really, really interesting. It didn't start out that way, certainly. Like in the beginning, it was mainly GPs inviting their LPs to the site. Hey, write a review on us. And then those LPs would actually be invested with multiple other GPs, and then they would write reviews on them organically. Like, okay, I was invited by this person, reviewed them. I have 3 other people that I've invested with them, good or bad, reviewed them. And then that kind of like that cycle continued. Now we're at a place where we're really influencing Google search and like AI results, where in times like if there's a sponsor on our site with a lot of reviews, if you search for them on Google, we'll show up for them like within the first couple results. And so like that's been a heavy source of our traffic now.
That's incredible. So it's a marketplace.
Thanks.
This never existed when I was a real estate investor myself, right? I mean, this is incredible.
Yeah.
I never heard of it. So amazing.
Yeah. It's encouraging and also heartbreaking at the same time, because sometimes I'll talk to people that they're getting crushed right now and they're like, I wish this was around 3 years ago. It's like, hopefully we could change the next 3 years for you and mitigate the risk on that.
Incredible. Pat, so when you think back to the early spark that bothered you the most about how private real estate deals were being presented or experienced by investors, what was that?
I mean, it's the influencer space, simple as that, like very direct. I think the majority of, not the majority, I shouldn't say the majority of it, but like, I think there were some bad actors that were raising on charisma, and there were some LPs that bought into it. And I'm not going to like indemnify the LPs that there was no responsibility on their part, but like the majority, there are people out there who were marketers and then used real estate, right? They were not real estate that were marketing they're not real estate operators that were engaging in marketing. These guys built audiences based on charisma and buzzwords and influence, and now it's kind of coming out in the wash. So that was what got me the most is it was very difficult to figure out who to actually trust and to understand, is this influence or is this actually happening?
So people can trust the people that are on your site based on reviews or positive reviews or things like that?
That's our long-term mission. I mean, obviously it's not, it shouldn't be the single factor in their due diligence, but it should be a part of it, right? Because what we're doing is we're bridging the qualitative aspect to what I would say like quantitative industry, meaning a GP's background could be audited pretty easily, right? Like you can do background checks, you can do this, you can do that, but you really don't know what the investor experienced along the way. How was communication? Did this happen? Did that happen? Like what was the story around the return? So what we're doing is we're saying like, yeah, sure, let them market their IRR over the last 10 years, but listen to what the investors actually experienced during that time to help with your decision. And so, because historically, I mean, it's literally called private investing, right? So like there's no standardization or like, I don't know, in terms of reporting, like there is public companies. And so what we're doing here is we're saying like, hey, here is a place where if you are a real investor and you have to prove that you are a real investor, share your experience so others can learn.
Incredible. So, has anybody ever reached out to you upset that they're on your site because you are adding them regardless if they know it or not?
Yeah, quite a lot, honestly. I mean, it's interesting. It's every negative review a GP gets is, oh, this isn't true. It's off by this, or this isn't right. We've been threatened with litigation plenty of times. It will come to fruition. Like we didn't get into this business thinking that it wouldn't. When it does, we're going to publicize everything about it. And if the GP is right, then we're going to publicize that so the record is set straight. If the GP is wrong and it was an attempt to silence investor voice, we're going to go all out and exhaust all our resources to make sure the market knows that. So yeah, I mean, people are, it's they're not fun, right? Getting negative reviews in general aren't fun. We do allow the GPs to respond to those reviews and contextualize the situation because yeah, sure, there's going to be a time where LPs are emotional, right? And maybe they didn't get their email responded to within 45 seconds and they're upset about that. And so the GP can contextualize it, right? It doesn't make the experience inaccurate. It's a highly subjective situation and the LP deserves to share that and the GP deserves to respond to it, right? It's we want all experiences on the site. That's what it is, right? That's what we're really positive ones, negative ones, return based, communication based, quantitative based, qualitative based, like all of those need to be on the site so the LPs have the most amount of information to make their decisions.
Incredible. So,
Yeah.
for listeners that haven't seen it yet,
Yeah.
and best clearly is in plain language, what problems do you solve for LPs and what problems do you solve for GPs? So, for example, you verify investor reviews, sponsor profiles, LP due diligence, reputation and social proof, pattern recognition over time. What does that look like when you're on your site?
Yeah, all of the above, right? We help the LP find and evaluate GPs. Bottom line, like that is part of that. It is part of that process, right? Where we have this set up so you don't have to your investment strategy isn't determined by chance, meaning in the past you would have to go to an event, get an introduction, meet a GP, wait for a deal that matches your criteria, and if not, repeat cycle 1 through 3. We allow you to start with your preferences, right? Start with your preferences, filter it down to the ones that match that, see if it works for you. If not, just keep going, right? You have a short list of people rather than waiting. And then again, verify what you're hearing from the GP and in media, meaning is what they're telling you what other LPs are experiencing, right? That's the big one is get outside of the influence from the people that have the most to gain from your financial commitment and read those types of experiences. On the GP side of things, we help them separate from negative media noise, right? Is that we help them create credibility. We help them create trust based on the voice of their investor. And that's where GPs are struggling right now is it's really hard to raise capital. Why is it? LPs are taking longer to make decisions. They're evaluating more than one GP. So how do you separate yourself from the noise and from competition, right? Is you share that LP experience and you don't do it on your own terms, meaning it's not what you just copied and pasted on your website that who knows if it's real or not. Here's a resource that you can't influence whether these reviews go up or not, that you can point your investors to, to help with the credibility side of things.
Amazing. So let's talk a little bit about the LPs and what they really experience right now. So you're sitting on a growing base of verified investor reviews. What are you seeing? What are the LPs happy about and where are they getting burned?
Yeah. Yeah. Number one topic. I mean, there's not even a close second is communication. Even when LPs are getting smoked, they're having their capital wiped out. They will have that conversation with me and obviously returns. I mean, obviously no one's excited about if someone's communicating and they're losing all of their money, it's not something they're happy with. But what I'm saying is in terms of the experience, their communication is ranked number one as the sticking point on both sides of it, right? Like, hey, things could be going well and I don't know. I haven't heard from them. Likely not the case. But mainly is, hey, I'm pretty sure we're losing all our money and I haven't heard from anybody. I don't know who to talk to. I don't know where to go. No one's answering emails. It's communication. It's not coming on time. It's completely changed. It's slowed. Whatever it is, that is where LPs are most frustrated with right now, far and away.
Capital calls, misprojections, as far as marketing and reality versus reality and gap.
Yeah, all of the above. Those are being brought up. Here's the thing: is capital calls are a necessary thing in the industry, right? The whole point of it could be the best possible outcome. Does that mean LPs are excited about it? No, right? That's crazy to paint that narrative, and I think that's what's happening is the fact that the capital call is a tool. right? To essentially like with no other with no other decision, right? It's like, hey, we need to inject more capital in order for this to go well. And it could go well, but that doesn't mean in the moment it's an exciting thing for the LP to hear. Pause distribution, same thing. It could be the best thing to do for the business model long term. Does that mean that's what the LPs want to hear? No. Why is it? Because they were presented a business plan and what's happening is not aligning to that business plan. So they're bringing that up. I will tell you with one thing though, is these LPs are not, it's a very balanced review, right? If the LP believes in the GP long term, believes in the business model long term, and the GP is forced to make these unexciting decisions like pausing distributions, that will come out in the review saying, hey, look, we had to pause distribution. I'm confident in these guys long term. I'm looking to see how this pans out, right? Well, the reviews are not like the, scorch the earth. Some of them are, right? Some of them are if they're losing all of their money, or we just had one come through where there's like, I've seen like multiple capital calls, which is wild. But yeah, it's a really balance where it's like, yeah, sure, they're pausing distribution. We may have had a capital call. They're keeping us up to speed with what they're going to do with it, why it's happening, and what we should expect. So therefore, I'm confident, and we'll, something like that. But yeah, I mean, all of that is getting brought up. And yeah, what we do is you asked about marketing versus reality. One of the things we ask people to rate is like, what was the pre-investment communication like? What was the post-investment communication like? Meaning, hey, how did you feel before you gave them money?
Mm-hmm.
What was the experience like? Again, marketing, influence, things like that. What was it like, or promises? What was it like after you gave them money? Like, did that all stop immediately? And how was your alignment of expectations? Like, what was what they told you actually happening? And so what's interesting is on these negative reviews, you will see pre-investment communication 5 stars, post-investment communication 1 star. And so it's like, okay, well, like that's kind of the root of it all. Oh, well, not maybe not the root of it all, but it's like it's there and it's prominent,
That actually brings me to my next question. You may have already answered it, but if you had to sum up the biggest theme of negative reviews, what would that be?
Yeah, that's it. Communication. It's
Communication.
communication. For sure. Yeah.
On the flip side, what themes have been keeping showing up in the positive reviews?
Yeah, same thing on the other side. Well, obviously, if they're meeting projections, right? Or a lot of these individuals, what's interesting is I think there's a lot of media noise here, right? It's clickbaity. It's everyone's failing. There's capital calls everywhere. There's a lot of GPs that haven't had to do it, right? There are plenty of people that haven't bought on floating rate debt. That it just isn't happening to them, and they're meeting projections, or they're exceeding, or they haven't had to do any of these pause distributions or capital calls, and the LPs are still saying like, hey, this is on target. This is going really well. We exited for this, and communication was great, right? That's what it is. And the big things to remember is like, we're not verifying we're not verifying performance. That's not what we do, right? If most of the times the reviews are not, oh, these guys projected a 16.1 IRR and it was a 15.2 and I'm unhappy, right? That's not really the base of the review. It'll talk about underperformance, but it'll talk about the experience along the way, right? Like, this is why I would reinvest with these guys again, aside from just numbers on the paper. And communication is huge, like being kept up to speed, regardless of the scenario, regardless of the performance, right? These investors sometimes don't know what's going on, right? And need to know what's going on. And they'll compare that experience to other GPs, right? Like, there's a lot of reviews where like, hey, this is the worst. I've invested across multiple GPs and this was the worst communicator out of all of them, right? And that exists. And I think that's a big one too.
You're in a unique spot, Pat. So what do you see as far as patterns across operators that separate them from the rest? What are some of the things that separate some of the operators from the rest of them?
Yeah, I'll double down on this one. I'll keep saying communication. That's the biggest differentiator. That's the biggest separation. Again, there's the obvious ones, right? Like, are they performing to projections, right? Are there capital calls? Are there this? That I feel like those are obvious. If you have a bucket of GPs that have not lost investor money versus you have a bucket of GPs that have lost investor money, there's a clear difference there. But again, that middle ground, of separation is all experience, plan, communication. That's what it's about right now.
That's the number one thing.
Number one, not even close.
You introduce the public or semi-public reviews into a industry, you change behavior. So how do you see verified investor reviews changing incentives to private real estate over the next few years?
Yeah, good question. And that's the foundation of our business, right? Is we think this is a completely imbalanced market. Right. And it is an inefficient market. There's an information asymmetry favoring the GP, which is creating distrust among LPs. It's as simple as that. There's no, like, what I tell people is regulated doesn't mean transparent. And we're wanting to change that. And what we think is the more trust that enters this market through these reviews, the more liquidity will move and move faster. It's as simple as that. It'll become an efficient market if the information is balanced on both sides, and the industry will grow. I read somewhere that 2024 was the slowest capital raising in real estate private equity since 2012. And that's because trust was fleeting. Like it was fleeting. And the LPs that the experience used to be performed, or like returns were outweighing anyone's care to be communicated to, right? Like they were getting paid. Now our up and to the right experience in real estate is over and people are getting crushed. And so like LPs don't want to bear that risk anymore. We want to create more opportunities in the market, right? We want a balanced market between LPs and GPs, an efficient market and more liquidity and people to be moving as fast as they were in the past. We just think information has to be more public in order for that to happen.
Do you think the LPs are going to start expecting this type of transparency as a standard, not just a luxury?
Yeah, I hope so. I really, really hope so. I really hope like transparency becomes the new payment rails in private equity or in private investing. Yeah, I really hope so.
So how did LPs do due diligence in 2025? For LPs who are listening right now, and either they're new to private deals or maybe they got bruised in the past, the last couple of years, right? What does smart, practical due diligence look like going forward?
Yeah. Don't be afraid to ask very difficult questions. And the biggest thing I would say, make sure you get the track record contextualized, right? It's very easy to share your track record when the entire industry was going up and to the right. Right. And so really determine, was it the operator or was it the time? Really dive into each deal, ask the hard questions about deals that haven't performed, ask what they did in those scenarios. But it really comes down to, and I can't stress this enough, get out when you're evaluating a GP or an opportunity, get outside of the influence get outside the person that has the most to gain, right? Based on your decision. So like when you're asking these questions, great. Right? Ask them as deep as you possibly can, but also go to external sources to validate what they're saying. And that's my biggest recommendation, right? Like have your set of questions, your most important questions. There's a billion guides on what to ask GPs, but also make sure you're validating what you're hearing and not just taking it at face value.
I think that's great. So if we had a checklist for LPs to hand them, right? Just a one-page checklist before they wire money to a deal, what would be on that?
Yeah, well, I'll kind of answer that with almost like a deeper answer, because those exist in plenty of places, right? And I think there are really important questions to ask, but the most important thing is like when to ask those questions and how deep, like the second level questions, I should say, right? Like you can always ask, like, tell me an example of when a deal went wrong, right? And then when in the questioning cycle do you ask the next layer, right? What happened, when, why, what did you do? How did you handle it? What was the communication like to LP? Can you send me an example of the communication you sent to LP? Things like that. So there are a ton of guides to help people through that. I don't know if your community, there's an individual, his name is Alexei Chernobelsky, and he has a great guide on I think it's like 15 questions to ask GPs. I would follow. I mean, there's a lot, right? There's a lot, but really understands not only what went well for them, but what went wrong and how they handled it. And then challenge them on their answers, right? Is like, just don't take anything at face value. It's more important to ask the second level and third level questions than it is like the initial high level, right? Because it's not scripted, but it's something they've answered a million times, right? Okay, be prepared to answer this question. So really get deeper, when you do ask that a question like, hey, what happened when a deal went wrong? Does that make sense?
What if they're a new GP? They don't have much of a track record. We're all newbies at one point, right?
Sure. Yeah. It's a really good question, and I've heard a lot of different things from a lot of different people on that question. And I think this is a preference standpoint. Some people will not touch a GP without a track record. It's as simple as that. I've heard other individuals, really more experienced individuals, say that like a GP experience should be balanced against risk. Meaning if they're taking a risk on a newer GP, their return should be higher, right? Where you're helping them build credibility. It may or may not be high risk, but I don't think they should be counted out. It's just a matter of preference there, because you're right? And they could. I've talked to GPs where they've been doing their own deals for decades, and it's all their own company's capital that they're reinvesting in, and they're going to raise outside capital. Like, should that be counted toward track record? That's up to the individual, right? We don't necessarily allow that as a review on our site if it's but I think it's important to understand your risk tolerance and your risk capacity in a scenario like that.
Amazing. So when you look 3 to 5 years out, what do you think the private real estate syndication landscape looks like if you're successful? How does that change the game?
Yeah, the way we ultimately plan to change the game is by creating a safer past investment ecosystem. I hope the stories that I'm hearing over the last 3 years are not the stories I hear over the next 3 years. It's as simple as that. I hope better GPs get found, and I hope LPs minimize like risky investments. Simple as that. Where do I see our place in the next 35? I hope we're part of every single private investment evaluation process. That is my goal. I hope that nobody makes another investment decision without checking Invest Clearly before they wire those funds. Obviously, there's a lot of work for us to do to get to that point. We need a lot more reviews on a lot more GPs, but that is my mission in terms of creating that safer investment ecosystem.
That's awesome. I think that leads us to our next question, which is you spent years in high performance sales environments. Now you're building a trust and transparency platform. What's one lesson from your career that you carry on into you building this company?
That's a good question. One lesson, I mean, from a founder standpoint, I think the resilience of sales has translated into this. But the biggest thing is that from like my background has been that like the objectivity and the neutrality that I learned at Gartner is scalable, right? Like I think a lot of people in this industry, when I kind of talk about our company, hit the floor when I say we don't take a piece of any deal, like we're not commissioned a dollar. Like people don't understand that, right? Everybody thinks there's a part of there's a commission based structure based on deal performance, and what we've realized is like, sure, that may be the easiest and fastest way money, but it's not the best way to do what we're doing. And so that like that neutrality is scalable, and it's the best way to align to our mission.
Amazing. So you're not taking a part of any of these deals.
No, you can't even invest on the site. We take no part. We're not like registered with any regulatory agency. If no one ever invest, like we would never, we don't even really know when people invest because of, things they hear on Invest Clearly, unless we hear from the GP, right? They're like we that's not what we're doing here. We are a review platform, and the reviews are on the GP, right? They're not actually on the deals. And so, yeah, we don't sell LP leads. Like, a GP can't pay us for 1,000 to LP contacts to market to. It's not what we do. And we don't take a piece of the deal. And the reason why is we know that if we ever did anything like that, at least it would compromise our objectivity. Like LPs would stop trusting it, right? And so and it's kind of how I feel about, fund managers and community, like LP communities, a lot of LP communities. Like, how do you know, the person that's running it is getting a kickback from it's this whole convoluted thing. And so what we're doing was we're really transparent. Like, yeah, no, we don't take any piece of that, because if we did, we'd lose the trust of the LP. And if we lost the trust of the LP, the whole business goes under. So, we're objective.
Amazing. Is it a membership site?
It's free to the LP. So it's completely free to the LP. It'll always be free to the LP. We don't paywall, gatekeep. You don't even actually have to sign up for it to use it. You can just get on there and start kind of scrolling like anything else. And then GPs can claim their profile for free, meaning if there's a profile on a GP, they can go in there and say, hey, this is my company. Let me have administrative access to it, and I'll respond to reviews, and I'll, update some information that Pat wasn't able to find publicly. At no point can they edit, remove reviews, and at no point can they see the identity of anonymous reviewers. Like can't do that. And then what we do is we sell upgraded profiles to GPs. And so think about that as like engagement resources. They can embed their calendar on the site. They can have downloadable documents, video, marketing. They could use our tool, like our widgets, where they, pull reviews from our site onto theirs. They have recommendation algorithms removed from their profile. Depending on the tier, they may get prioritized placement in other recommendation algorithms, things like that.
That's awesome. If you were talking to a younger version of yourself and getting into the world of private deals and syndications, what's one piece of advice you give to yourself?
Boy, let's just say a younger version of Pat is a lot different from the Pat today. So there's a lot of things I would tell myself back there. Yeah, I think the same thing that I've been saying. Get outside the influence. Don't take marketing at face value. Do your due diligence. So this is the big thing for me is I built this because I needed this, because I trust people way too easily, right? I've gotten to plenty of bad experiences because I like trust people beyond what they should be trusted, right? And I just kind of take that, hey, this should be a good person. So I'd probably tell myself like, yeah, it's good place to start, but also verify what you're hearing. You know what I mean? Verify this individual, verify this experience, verify what what they're telling you.
Incredible. Pat, this has been excellent. For people who want to dig deeper into what's the best place to learn more about Invest Clearly?
Yeah, investclearly.com, straight and simple. Also, you find us on LinkedIn, Invest Clearly. We're pretty active on there in terms of like publishing our educational content and posting the reviews and things like that.
Excellent. Newsletter, anything else?
Yeah, we've got a newsletter. I mentioned our education. We have like a blog type. We call it Invest Clearly Insights. And what we do is we post educational documents and we have guest contributors and things like that that you can check out as well.
Pat, I wish I knew about Invest Clearly when I started in my investing career. I would have definitely would love to have seen some of the reviews of people that I got associated with. I wasn't, as far as I knew, anything available at the times. Knowing about this platform and being able to publicize this and get that name out there is going to help a tremendous amount of new time investors, even old investors, right? Understand exactly what they're getting into.
Yeah, for sure. Well, I hope we could help you on the next few.
That's awesome. Perfect. So we'll drop those links in the show notes. Pat, thanks again for joining me, for the work that you're doing, bringing some transparency and investor protection into this space. To everyone listening, this has been the AI Edge podcast. If you got value from this conversation, share it with another LP, JP, or advisor who cares about trust and transparency in private real estate. We'll see you on the next episode.